Thank you so much for joining me today. Lots to cover. We're one day away from Tesla's earnings for Q4, and we've had an onslaught of news that could prove as positive catalysts for the rest of the year. So let's go ahead and get started. Here's a tweet from Sawyer Merritt overnight. Breaking: Nevada Governor Joe Lombardo has announced in his State of the Union address tonight, which was last night actually, that he will be joining Elon Musk and the team at Tesla tomorrow, which is today, to unveil plans to build a new $3.5 billion advanced manufacturing facility in northern Nevada for the Tesla Semi. And here's a snippet from the statement. It reads, "Case in point, I am looking forward to joining Elon Musk and the team at Tesla tomorrow when they unveil plans to build a brand new $3.5 billion advanced manufacturing facility in northern Nevada for the company's all-electric semi-trucks." Some context for the $3.5 billion number. In December 2021, this is from Wikipedia, by the way, so you know it's true, Elon Musk estimated that Giga Texas will require a total investment of at least $10 billion and may employ as much as 20,000 employees within the company. And of course, this is an exciting development for the company. It hasn't been announced today yet. It's 1 p.m. Central right now as I'm recording this, but I'm expecting this to be announced sometime after close of market today. As you know, Tesla Semi is one of the recently announced products from Tesla, and nobody's really figuring this into their models from a stock perspective. And so depending how many units they're able to ship out of this factory, this could prove to be a pretty big investment and could give Tesla some very big results here in the coming years. Elon Musk has mentioned that Tesla has a goal of 50,000 units sold per year for the Tesla Semi, and they hope to reach this run rate by the end of 2024. This factory, if announced, will be very instrumental in making sure Tesla reaches that goal. Next bit of news from my boy Matthias. Big news out of Germany. BAFA, which is a regulatory body in Germany, has adapted the list of eligible electric vehicles. Every configuration of the Tesla Model 3 and Y receives full BAFA incentives. And Joe Klender from Teslarati kind of gave us some additional context here. The Tesla Model 3 and Y officially qualify for the maximum subsidy across each trim level, qualifying the vehicles for up to 6,750 euros in discounts. So this is something that Tesla was able to take advantage of in Germany in 2022, and they weren't slated to receive these incentives until this was announced. And so the proper way of thinking about this is that Tesla now is able to continue receiving the incentives they were getting in 2022, which shouldn't disrupt Tesla's ability to generate demand in that region. If they didn't have the incentive in 2023, then it would mean that versus 2022, they would likely sell less cars than they would have if they had the incentive. Now that that has returned, it's very likely that Tesla's momentum will continue in that region. And on the topic of Germany, this is a pretty interesting bit of news that broke earlier this morning. News from Sawyer Merritt. Ford in talks with China's BYD to sell German plant, WSJ reports, WSJ being the Wall Street Journal. Here's an excerpt from the article. The factory in discussion is the Saar-Lewis plant, I hope that's pronounced correctly, where vehicle production is slated to eventually end in 2025, the Wall Street Journal report said, adding that the talks are still in the preliminary stage and may ultimately fall through. And so what I gather from this is that Ford likely has an idea of what their demand profile is going to be like in the next 3 to 5 years as the auto market transitions to EVs. And this is probably a move to right-size the company for the decade. There has been a lot of assumptions around how legacy automakers will be able to transition to EVs. And those that have been following this story pretty closely know that putting an EV line next to your gas car line is not as easy as it sounds. If this was the case, Ford wouldn't have to sell a factory or downsize the capacity for the decade. So this is a wise move by Ford to really understand where they are positioned in the market and to get some additional cash for offloading that factory. And so of course on the flip side, what this means for BYD is that now they have a place to build cars in Europe, which is not just great for BYD, but it's also a big warning sign for legacy automakers that there's a low-cost mass market EV manufacturing again coming into their turf. Tesla, of course, being first with the Berlin Gigafactory, and now you have BYD with a factory of their own. If you're enjoying this video so far, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you so much. Now, talking about Tesla's dominance, here's a data point that was shared yesterday. Tesla sold 2.6 times more EVs in California than all other automakers combined in 2022. And yes, you read that correctly. Here's a graphical representation. Model 3 and Model Y both around 90,000, 95,000 units sold in California for the year of 2022. Model X roughly around, call it 12, 13,000. Model S around that same area. And then after the Model S, you have the Mach-E, the Bolt EUV, the Ioniq 5, and the ID4. And what's super interesting here is that the Model X and the Model S are both twice as expensive or more than the rest of the vehicles on this list outside of the Model 3 and the Model Y. And so if California was representative of where the market is shifting as far as vehicles for the entire United States, this bodes extremely well for Tesla, especially entering 2023 with the EV tax credit that they didn't have in 2022. And obviously, this bodes very poorly for legacy automakers. There's been so much noise about Tesla competition coming, but it's clear from this graph and the data in California for 2022 that they're nowhere near close to capacity needed from a supply perspective, at least, to be able to even remotely compete with Tesla from a volume perspective. What gets lost in a lot of this, I believe, is that Tesla is a mass manufacturer of electric vehicles. And the only other automaker in the world potentially that could be called a mass market EV maker is BYD and perhaps Volkswagen when it comes to global sales. However, if California is the broader trend for the United States, then legacy automakers are in huge trouble in 2023, especially as the car market continues to shrink. And then the last bit of news before we get into the earnings preview for tomorrow's earnings call. Sawyer again, my boy. Breaking, Tesla has increased the Model Y long-range price in the US by $500. New starting price is $53,490 before incentives for the Model Y long-range dual-motor all-wheel drive. This is very likely in response to Tesla receiving a lot of orders for the Model Y since they lowered pricing. This is a chart that tracks all of Tesla's new inventory for the Model Y. Thank you to Matt Jung for putting this together for all of us to use. And you can see ever since they announced the price cuts in the US, Model Y inventory for new cars has steadily been decreasing, reaching under 200 new Model Ys in inventory as of the end of yesterday. This is very likely a move by Tesla to kind of control the demand they're getting for the Model Y with this new pricing. If this trend continues, we're going to go back to the point where Tesla's going to have a backlog and it's going to force customers to wait. Tesla increasing the price for $500 is going to be a margin boost to their vehicles, and it's also going to temper demand a little bit for the Model Y, but this is very likely on a much higher production rate than before, meaning that the net number of cars they're going to sell in 2023 is going to be much higher than 2022. And if we compare this to the Model 3 inventory levels through yesterday, you can see that the inventory levels have kind of stabilized around the 375 new units in stock in the US. And depending where Tesla wants the inventory levels for the Model 3, there might be some additional pricing adjustments for the Model 3 as well. And with the Model Y getting $500 more expensive, the Model 3 becomes a more attractive alternative for many. And now let's go ahead and get into the earnings preview for Tesla's Q4 that will be reported tomorrow, January 25th, after market close. And just so you know, on my channel and many others as well, we'll be hosting a mega stream where we're going to cover Tesla's earnings from before market close all the way through the end of the call with post-call reactions. Coverage will start tomorrow, 1:25, 30 minutes before market close, and we'll go probably until 6:30 Central. And so start time is roughly 2:30 p.m. Central, and it will go for about 4 hours. So my voice is probably going to be very tired. Now, to kind of set a baseline of what the market expects, here's a tweet from Gary Black from this morning, friend of the show, shout out Gary. Tesla investor relation compiled consensus shows lower expectations than Bloomberg estimates, especially for 2023. For the fourth quarter, the market is expecting non-GAAP EPS or earnings per share of $1.10 and auto gross margins percentage excluding regulatory credits at 26.4%. Now, the 2023 numbers won't matter for Q4, but I'll read them anyway for you. The market is expecting roughly 1.8 million deliveries in 2023, which is a 41% growth year over year. Non-GAAP earnings per share of $4 and auto gross margins excluding regulatory credits of 23.8. But we'll focus on the non-GAAP EPS of $1.10 and the auto gross margin percentage excluding regulatory credits of 26.4. Here's the model that I use to try and predict what the quarterly earnings will look like. I have auto revenue coming in at $20.7 billion and the total revenue including energy and all other businesses at $23.945. I'm expecting total costs to come in at $17.925, which nets out to a gross profit for the entire business at $6.020 billion. After taking into account operating expenses, income from operations will fall to $4.295. After accounting for some of the adjustments that Wall Street makes in order to get to an adjusted EPS, my number is $1.23 versus the market's $1.10. And my auto gross margin percentage, including the regulatory credits, is coming in at 27.8%. This implies a 12% beat on EPS and a 90 basis point beat on auto gross margins. And of course, if you're somebody who follows Tesla closely, you know that this quarterly report is going to be very closely watched by many. Elon Musk himself said that quarter four earnings are going to be epic, and so we're about to find out what epic actually means. Some of the things I'll be looking out for is how energy is growing in Q4 versus Q3, what gross margins look like for Q4, especially after some of the incentives Tesla had to end the year. But more importantly, I'm very curious to see what kind of guidance Elon is going to give for 2023, given that he's talked very loudly about the chance of a pretty severe recession. recession. If the recent trends hold after Tesla lower their prices, this implies that 2023 should be a very, very good year for Tesla. Not just from a unit delivery perspective, but also from economies of scale. They'll be able to ramp Berlin and Austin quite a bit more, which implies a much lower unit cost per car, which also means that the amount of money Tesla's going to be able to make in 2023 is going to be more than last year, even though the margins might be down. This is because they'll be able to ship way more cars versus last year, especially now that they have these incentives in Germany and in the US with the EV tax credit. And so if you're interested in tracking what the Q4 earnings are going to be like with full coverage, do consider following my channel. And lastly, I do want to give Sam Evans a shout out. Sam Evans runs the channel, The Electric Viking, and his wife Shanna was just diagnosed with stage 4 cancer, and they put together a GoFundMe page to try and raise some money for the very expensive treatments that his wife is likely to undergo. What's amazing to see is that the goal has been surpassed already within 24 hours, but if you'd like to chip in and help them a little bit, I've put a link to the GoFundMe in the comment section below. Sam, if you're watching this, I have you and your wife in my thoughts, and I know both of you are going to fight like hell to beat this thing. I do hope that you found this video helpful and informative. If you'd like to discuss this or many other topics with my community, do consider becoming a patron using the Patreon link in my description below, or joining right through YouTube by clicking on join right below this video. If you'd like to support the channel by purchasing some merch, just like the shirt I'm wearing right now, do consider doing that in the description as well. Or you can use my code in the description to get up to 20% off for Athletic Greens, which is a supplement that I've been taking every single morning for years. Thank you so much, everybody. Tomorrow is going to be a very exciting day with Tesla's earnings, and I can't wait to watch it with you. Thank you for watching, everybody. Take it easy. Bye-bye.